Welcome everybody. Welcome to the Arizona Real Estate News Show. Today, our first inaugural show with I am the host Rick McHone with Pat McMasters of Price Mortgage, and we have Jacquie and Ruby from Century 21 Arizona Foothills. Good evening. How is everybody?
Doing great.
Fantastic.
Ready to rock and roll? So we all got our cameras set up and ready to go and find out what happened in
The
the
first
real
edition.
estate world this week. Yeah, we got to see if there's anything new that happened. So let's take a look and see what went on just in a brief snapshot here. I'm going to start out. The first thing is showing you that the inventory has continued to climb. We thought that maybe it would slow down after what we saw a couple weeks ago, where it went from 65.22 to 73, but then it went from 73 to 81. Now, these are just active listings, not under contract, but that's almost a straight up ladder that we're seeing right there. And it still has a long way to go. 8,000 needs to be at about 20,000 before we finally start feeling that balance. The other thing we're seeing, though, that's really spiking up is the number of price reductions that the sellers are doing. Now, this doesn't mean that the actual sales price of homes is declining because that's still going up. In fact, last month it went up 3.5%. But sellers that thought they could get just about anything for their homes are quickly finding out that they're wrong and they're pulling back. And this is 1,496 homes over the past week have reduced their price. The good news still for sellers is that we are still in a situation where we have 56% of the homes that are on the market going for more than their list price. So we're seeing a situation where there's quite a few dominoes falling that look like we're heading towards a balanced market, but not enough yet to affect the bidding wars or the list prices. So, Pat, tell me, what are you seeing this week on the lending side?
The lending side, very interesting. Basically, we're starting to see a little bit of a pullback on rates. I mean, this is today's bond. The 4.5 coupon was up 42 basis points, and the 10-year Treasury was down 10 basis points. Price and rate go inversely. So, I mean, if you look at it, I mean, since about the end of the year, this is where we just seen this staircase climb basically upward. And now we hit this top here in May. So the last, 3 weeks now, 3.5 weeks, we've been seeing rates kind of pull back because the Feds have obviously said they're going to raise rates June, July. There's some, obviously some inflation numbers are coming out toward the end of this week. So it seems like things are kind of settling in interest rate wise in the low to mid 5% range. I think people are just getting over that shock of going from 3.25 up to 5, and they're kind of like settling in their horses now a little bit, and which is a good thing. So, I mean, from here to about here, I mean, I've got a gentleman I'm doing about a $400,000 loan. It was about a $4,000 difference in closing costs in terms of just, from here to there, just the adjustment. So rates have settled out nicely.
Now, you did tell me about an article that we saw on MBS that was talking about how new construction sales are starting to slow, and it looks like new construction is getting affected by these higher rates more so than resales. Why is that?
Well, I mean, this report was interesting, and Jacquie and Ruby can obviously allude to this a little bit further, but I'm going to kind of read this report. That's why I had to get my glasses on. It says that, the Fed's going to hike June, July, and it says new home sales, which measures signed contracts on new homes, were down 17% in April to a 591,000 annualized pace, which was in line with expectations. But the report is actually weaker than it appears, as there was a negative revision for the previous month. So it says when factoring in, sales were down 22% from initially reported number. Year over year, they were down 27%. And they basically say why the big decline. It says higher rates and home prices have had an impact, but the biggest thing is uncertainty. Where it normally takes 6 months to build a new home, it's much longer, and there's obviously there's a lot of uncertainty in terms of when is the completion time. So I had a lady I was talking to last night. She was qualified at 3%, couldn't lock your rate in several months ago. Now at 5.5, she doesn't qualify. So I think a lot of people really are just uncomfortable with the uncertainty of a new build. Like, when can I lock my rate, versus a resale? So I think that's going to have some impact on new build versus the resale market.
It could possibly put some pressure back on the retail side, the resale market. So, ladies, you're out there, boots on the ground, on the street. What are you seeing out there? Are you feeling a pullback, or are you seeing anything different?
Well, Ruby, I'll go first if you don't mind, real quick.
Yeah, go ahead. Yeah.
Honestly, I don't think I'm seeing it. Our buyers are busy. I'll let Ruby talk about the recent contracts she just got through. But I think what's happening is that I think a lot of the sellers think we've peaked. And I'm actually surprised. I thought, we were going to have inventory was going to be super low because so many people were going to be afraid to let go of those low interest rates. And it's actually just the opposite. So a lot of sellers feel like, they might have missed the boat or they're right at the peak. And so we're having a lot of conversations and they're actually willing to be realistic. Most of the people I'm talking to, I know there's still quite a few out there that aren't, and they're shooting for the February, March numbers that we had. But the ones we've been talking to, we just listed one this week and listed it at 365. We went on the market Friday night, Saturday morning, one of the two. Mm-hmm. We were booked solid with showings all day, Saturday and Sunday. And it was in the price point between 300 and 400, which was the one I thought was pulling back the most. And we had showing after showing after showing. We got multiple offers, escalation clauses, and appraisal waiver in one of the contracts. And in fact, Ruby's in the process of negotiating a counter on that, just to do a little bit of cleanup, not leave a fridge, but we're busy. We're super busy. Ruby?
Yeah, I actually got 2 contracts under list price this week. So 2 accepted. I have a buyer out in McDowell Mountain Ranch that the property's listed at $770,000. I wrote the offer for $718 because I felt like they were overpriced. They came back at $722,000, so we took it. And then I have one that I just got accepted this morning for a house out in Surprise, where they were listed going off of what they think Zillow thinks they should be listed at. They listed their house at $480,000, really giving their realtor a pushback on price and insisting that's where they were supposed to be. But we came in and got them to agree to $440,000.
Wow. So the buyers should not be afraid to offer lower than list, because now you're getting some counter offers instead of people just rejecting it.
Absolutely. And I feel like a lot of it's in how we as realtors convey that message from one realtor to the other side, to the other party representing the other side, and giving them, what are we seeing in the market and how can we use that to our advantages to get contracts accepted.
Mm-hmm. I agree.
Mm-hmm.
Yeah, I think so. I saw it. Well, let me ask you this, and for the panel here, the group, with the numbers that we're seeing and the way things are changing, with the inventory going up, and we can see that the successful sales of contracts is coming down. It's still above 90%. But do you think it's going to be considerably slower? Do you think that the bidding wars will be behind us, or does it look like it's going to keep going?
I think
we had a bidding war kind of on this. We had 2 contracts that we really had to go back and forth, not back and forth with the other agents, but they were drilling us to find out where was the other offer, what were they doing, escalation clauses, appraisal waivers, and that type of thing. So I mean, I feel like, Jackie, you can insert here. It's not necessarily.
I think that we would have had even more offers on that one. We actually stopped the showing. So the seller's 80 years old, and it was really tough on her because all day Saturday and Sunday, she was just appointment after appointment after appointment. We had numerous showing requests on Monday, Tuesday as well today, and we actually stopped the showings because we had good enough substantial contracts in hand. I think what's going to be really super important going forward is that agents educate their clients, both sellers and buyers. So buyers, get them off the fence. Now's the time. Same thing with sellers. Get them off the fence. Now's the time. I think if you price appropriately and you don't shoot for the moon, because you don't want those price reductions. It's a stigmatization on the property. If you price it properly, it's going to sell. The market's still moving. It's still strong. I mean, a lot of people are worried about it, but we just went from a completely insane market to a really good market.
And it's really hard to manage expectations right now too, because being in a really frenzied market, it's hard to back off and say,
right.
Oh, gee, I missed it. You just saw what your neighbors went through. They sold it in one day. They sold it in 2 days. They got more than their asking price. And now you're feeling like, well, gee, they're picking on me. What's wrong with my realtor? So going towards Labor Day, do you see any headwinds? Because I kind of do. I kind of see all of the metrics kind of falling to where there'll be headwinds for sellers by Labor Day.
Or actually Memorial Day. You mean coming up this weekend?
No,
or you mean the end of summer?
Yeah,
okay.
End of summer, yeah.
Okay, yeah.
I mean, simply, if you just look at inventory alone, if we continue at this rate, there'll be enough choices out there. And then I think, Pat, last week they said mortgage applications were down 11%. Do you think that mortgage applications as a whole are going to continue their decline, or was that just an anomaly?
Well, I think, obviously the refis were down like 60%. In general, I think they're down a little bit. But I think overall, though, what I see is it always takes about 2 to 3 months for reality to set in with buyers, sellers, with rates, with the market. So nothing happens on a dime. So I think there's this come to Jesus moment. It takes a couple months to kind of settle in. I think sellers are going to be like, okay, I don't want to be the last one off the boat. So you're going to see, the air has been kind of popped or let out of the balloon. We went from going from 150 miles an hour to basically 110. We're still going at a high clip. I don't see it slowing down. Like you said, I think people are adjusting their expectations about higher rates. So I don't see things. There's still a lot of demand out there.
There is.
I get a lot of comments that people want me to put a number on it and say, you're already seeing that things are going down. So tell me where you think we're going to be next year. I think we're going to be down X percent. And in my mind, I'm looking and going, you can't pin a number on a decline until you see the start of a decline in prices. So, we're not at the point yet, just because inventory is coming up to where our sales prices are going down. We're not even close to that. So I can't begin to say, well, 6 months now, I think we're going to be down 10% until I see my first sign of an actual price or sales price reduction.
Right. And that's the big difference, is that price reductions versus value reductions.
Right.
And we're not having value reductions. The appraisals are coming in strong. I think this is a little bit of an anomaly myself with the amount of listings that are coming on. We had a huge jump last week. I don't know that the jump was as big, Rick, you would know, this week, but I don't think that's going to continue. I think a lot of people are getting off the fence because they don't want to miss what they think is, the peak. And so I think we're going to have a period of time this is just my opinion. I mean, nobody knows for sure, but I think for the next 30 days, we'll continue to see listings coming to the market, but that's only going to last for so long. And then I think the buyers are going to settle into the interest rates, get more comfortable with this, because 5.5 is even phenomenal. I started in the days when they were double digits, and for up until the early 2000s, this was norm. So this is a good rate. So I think once buyers get comfortable, and I'm having a lot of conversations with people. I think as more buyers start to come back in the market because they're comfortable, and I think the sellers are going to slow down, because I think we're just getting a big wave of it right now. Then I think we're going to still just continue with a strong market. I don't know if I agree, Rick. I think we might not be so balanced by August.
It's going to be an interesting one to watch. So let's watch the numbers next week. And the one that you just mentioned, our inventory going to continue to go up at the clip that it is? From what I'm tracking, it doesn't look like it. I think you're right. It's going up a little slower this week than it did last week. Sales are staying right at that magic 3,500 every 7 days. So until that changes, I don't see things changing too radically on the inventory front. But we'll check in here every week. Thank you for tuning in, everybody, and gang, thanks for being on the show.
Yeah. Thank you.
Bye.
Thank you.